Hi guys and welcome. On this video we're going to discuss about 10 important things a credit card user should know before getting his card. By taking those factors into account, you'll be able to understand key features of credit cards, save money, and make your financial life much easier. Are you ready to get your new card? It's crucial for you to do your own homework to see what the right card is for you. Make sure your card of choice caters to your spending habits, lifestyle, and overall financial plan. Below is key information that you need to know about credit cards that will steer you in the right direction. 1. Why do I need a card? Credit cards are very useful tools. The important aspect of credit cards is that they help you build credit. By having good credit, you are in a position to qualify for future loans such as mortgage loans with great rates. In addition, having good credit can also position you to get an apartment or your own mobile phone plan. You'll also be able to avoid utility deposits and qualify for lower insurance premiums. Lenders apply other benefits as well. Credit card building is not the only one. A lot of credit cards offer travel or cashback rewards that range from 0.75% and 2.5% of qualifying purchases. Moreover, there are cards available that offer shopping or travel benefits that can save you a lot. For example, you can save on purchase protection, price protection, extended warranty, rental car, insurance, etc. Credit companies also offer no interest on purchases or balance transfers for the initial 12 to 18 months. When your card arrives in the mail, check out the card information for additional details. 2. The idea of credit cards. Let's go over the basics. When you purchase an item with a credit card, you're actually buying it later. This method of buying is different from a debit card, which takes out the money immediately after using it. Now back to credit cards. Instead of paying the store, you have to pay the lender, which gave you the money to purchase your items. When a payment becomes due, you'll have the money to go ahead and pay it off. The downside is that this style of buying becomes risky if you spend money that you don't have. When you don't pay your bill on time, you'll have additional charges such as late fees and interest. We'll dive more into this later. Furthermore, a major benefit of having a credit card is that the issuer offers security benefits such as unauthorized charge protection if you become victim of fraud. Most credit cards nowadays are chip-enabled. This aids in minimizing fraud by converting your card information into unique code through an embedded microchip. As a result, it's more difficult to duplicate. Even though you may already have some knowledge about credit cards, there may be additional information that you don't know about that you can benefit from. 3. The benefits of authorized credit card users. If you become an authorized user on another person's account, you have the benefit of using the card without having to worry about paying the bill. Moreover, if you don't have much of a credit history, becoming an authorized user empowers you to build credit because what is spent may be reported on your credit report and increase your chances to get a credit card without a credit history. You can also benefit if you have bad credit as well. One thing to consider is that the person that's responsible for the bill needs to make their payments on time. This is important because negative reporting will affect your credit score as well. 4. Card types, issuers, and brands. The average American is familiar with major credit card brands such as Visa, MasterCard, American Express, and Discover. Any credit card from local credit unions or banks will have either one of these brand networks. Most store locations will have posts that show what card brands they accept. Even though these major brands are widely accepted in the US, you may still run into stores that may not accept American Express or Discover. A lot of stores accept Visa and MasterCard, even on an international level. Credit card issuers typically list the brand on the actual credit card. Banks such as Chase or Citibank typically issue credit cards. These banks offer a wide variety of credit cards. Student credit cards cater towards college students. Cards that are secure are for people that desire to build up their credit history. Rewards cards allow cardholders to earn cash back, airline miles, or points on spending. Premium type cards come with even more benefits, but they typically have an annual fee. Moreover, stores and retailers also have their own cards that you can receive discounts and rewards exclusively at their store. This is why it's important for you to know what type of card you have so you can capitalize the benefits and rewards they offer. 5. What is APR, or annual percentage rate? APR is the interest rate that issuers charge on your outstanding balances. If your balance carries over into the next billing cycle, the issuer will charge you interest based on your APR. Getting a low APR is what you want. This also goes for individuals who don't even carry a balance month to month. Moreover, it's best to watch out for introductory offers because they advertise very low APR, such as 0%, that only lasts for a certain period of time before it shoots up. It's best to know if the number you see is permanent. If not, mark the date on your calendar of when the introductory period expires. That way, you won't get caught off guard later on when you see an interest charge. 6. How credit card interest is calculated. Most people believe that companies place interest on the card balance after the payment due dates. If you don't pay your balance off in full, you'll build up interest in your balance during the month. Let's say, for instance, that you have a $2,000 card balance. After you accrue interest on day 11, you pay off $700. On day 21 of accruing interest, you pay off an additional $400. Your average daily balance totals out to $14,000, or 2,000 times 1/3, plus 1,300 times 1/3, plus 900 times 1/3. If the card's APR is 15%, the periodic interest rate is 0.041%. You calculate the periodic interest rate by dividing your APR by 365. Moreover, you have to multiply your average daily balance by the periodic interest rate in the number of days in the month to know the amount of interest accrued in the month. In this case, for instance, it comes out to $57.53. The only way to avoid interest charges is to pay off your balance in full each month. Paying only the minimum will keep you in good standing, but paying interest is totally unnecessary if you spend according to what you can afford. 7. Credit limit and balance. One of the main things you need to know initially about your card is its credit limit. Your credit limit is the maximum dollar amount you can charge on your card. Depending on your card's rules and guidelines, once you reach the limit, you'll not be able to charge more. If you can, you'll have to pay an over-limit fee. For instance, let's say that your new credit card has a limit of $2,000. If you charge $500 at GYM, you'll have $1,500 left to use. The $500 would be your current balance that you'll have to pay back when you get your card statement. 8. The difference between secured and unsecured credit cards. Trying to get a credit card for the first time can be quite a challenge. You have to have a credit card in order to build credit, and at the same time you need credit to get a credit card. Do you see the dilemma here? If you find yourself caught between the two, look into getting a secured credit card. These types of cards require you to place a cash deposit that's typically equal to the card's limit. The money is used as collateral if you don't make your payments. More, it acts as a regular credit card because you have to make on-time monthly payments. The deposit in this case is simply a safety net. After your credit card issuer sees you've been using your secured card responsibly, you can transition into an unsecured card and receive your cash deposit back. 9. Age limitations. Normally, you have to be at least 18 years of age to apply for a credit card. Being under the age of 21, for instance, the lender requires you to show proof of income or assets that show that you are able to repay the amount you charge. If you aren't able to provide this information, your parents or another adult will have to make you an authorized user on their account. If you're a college student with a part-time job, you may have enough income to meet the requirements of getting a student credit card. Above all, it's imperative that you know that you'll have the full responsibility of paying your bill each month. 10. Credit card impacts on your credit score. Your credit score and history is simply a record of your behavior as a borrower. It shows the lender how well you are able to manage your credit cards along with any debts you may have. Having a good credit score is essential to having a successful financial future. It also determines whether or not you'll be able to have future cards at competitive rates. Owning a credit card and using it wisely positions you to have a healthy credit score and record. Moreover, you can achieve this by paying your bill on time each month and staying within your credit limit. This shows that you are a responsible borrower. Here you can find more tips on how to establish your credit. On the bottom line, having a credit card is a great way to help you manage your money as well as prioritize your budget. You can avoid overspending by making purchases that you know you can afford to make.